welcome back to the YouTube channel. Hopping straight into this video. Usually I make these videos on Sundays, but I noticed that I tend to come back on the charts often and just look at things when the market close. Check out the last video so you can see last week trades. I would do the analysis for GU EU on the broker that I use, my funded FX. Yes, I am in phase 2, live on the 10k. I passed phase 1. This is phase 2. We just about $1,500 away from passing. You can look at it as 3-to-1 trade, because I take 5 lots. Actually I take 8 lots, but 5 conservative depending on the day. But that's besides the point. I would look at the DXY from TradingView. I'll just quickly show you why I would not be using TradingView chart at the moment, because we can see that on the daily chart we closed higher on GU and EU. We have a bullish close on the day, but when I go to the 4-hour chart on EU, we have a wick and the body actually closed at the weekly open. So the fact that the daily chart and the weekly chart showing that we have this big body, that kind of trim off. And then when I went on my broker account, when I go on the daily chart, we see how it's supposed to look, where we have a bearish close on the broker account. So I don't know if forex.com just didn't update it as yet. Let me just see how the other feeds looking. Let me see. Oana have a bearish close and doji candle, whereas forex.com was normally used have a bullish candle. We'll check one more. FXCM actually don't use FXCM anymore as the feed, because the broker I using, I noticed the price is way closer with forex.com, but I know what we're on today. So that's why I use TradingView chart for the analysis of DXY, but for the pairs that we trade, I would just use the broker. So if you look at DXY real quick, we closed below this bearish weekly candle. So this is confirmed that we still seeking lower prices, even though we did hit the previous week low and still pull away. Again, let's just imagine this was a 1-minute chart, and if you was really bullish on a 1-minute chart after we swept the lows here this week, right, at down here, the week for me should have closed a little bit nearer to the open, and then this following week I didn't mind if we come down and test the close. Had we closed here and maybe dig in a little bit to the wick, maybe a little slightly into, if we had closed up here, we would have at least dig into this wick and then trade up and at least close bullish. We didn't get that. Alright, and this would have confirmed 1, 2, 3 down close. If this candle had closed a little bit more bullish or even close up to the opening price, could I reasonably expect the next candle to want to go up a little bit, and maybe if this was a turn for the year, use these 3 down candles as a future order block to go higher, especially if we ever get a closed above this bullish. Maybe if this candle had closed a little higher up, or at least closed above this candle, we could have potentially if the body had closed above here, you could have potentially an order block forming here, and then these 3 down candles with this candle expanding up to be like a monthly order block going forward. That's how I use it. That's how I be able to predict price, and yeah, that's how I've always been doing it. But this is a weekly chart, not a 1-minute chart. So as of price action, as of what we saw from the weekly perspective, we can reasonably think to get down to this low, which would be in line with the prediction that I had since a while ago. Just know I've been bearish a while now, since like August. Alright, so we do have a next accumulation leg in here, and even if I draw the fib down, we will get past here. I love to see accumulation legs. I love to see accumulation because I got a lot of insight from these accumulations, you see. So look like we're moving down in here. Even if you use this here, we still have the deviation. We have one deviation line up with here, and then we have the second one line up with here, just like I predicted here with the first line deviation bounce right at here, come up, fail, second standard deviation in it now, but ideally I want to get on into it. So, and you can look back at the other videos. I've been looking at that as a target for DXY. So drop it into the daily chart. We did take this bullish day low. We didn't close below it as yet, so I will expect us to close below it based off on how we trade. So we would currently in discount in relation to this leg in price, but why I'm not expecting it to hold, because yes, we in discount in relation from this high, well, these highs, and this, I'll just use this last bullish day. This bullish day almost invalidated this discount. The fact that we didn't close above it still showed that we still bearish, but when we came down up to here and we closed and then we traded down into the last day and then go up, if the market itself viewed here as where they would want to turn, I really would have expect this candle to just be like a wick underneath here and close at least bullish but up here, and then the next candle would have broken that bullish high and then not come back to it. That's what I would have want to see until we break out bearish candle. So we have to stay bearish until a bearish candle is broken up. Then we need to look to get some more data. Then if that day holds to go higher like this, we have a bullish day, then a bearish day. Then the next day broke that high, so the next preceding day was scheduled, or at least not scheduled, but the probability of it being bullish was there, ever present, you know. So we have to look for scenarios like that. But as of price action, what it indicates, what it's telling us currently, is that we still bearish until we get below here, you know. Well, if we get below here, it will confirm the bearishness, but I'm still not using this Friday as an indication that we want to turn. I would more use it as, yes, we in a discount in relation to the last 3 days, or the last 2 days. Can expect Monday to open, trade down a bit. I would have to see how it react at that at Friday low and opening price, and oh shit, my bad. Actually no, not my bad. I can do this and just slash previous day low, and I just like to mark the previous week low and high. Alright, good. So I can delete that. Previously close, right here. Previously low. Okay, I can leave this out for the time being. Close this. Previously open. Yeah, I like to get the numbers exact because like, precision is a hell of a thing for me. And how the trade entry are these days, it just need exact, like as soon as price is exactly at the price, I need to know. Alright, so this is how we look in here. We have the previous week open, and we have the previous week close. Oh, wait, the previous week open here. Alright, good. Right, so this is just the XY quick breakdown here. Alright, so we could still anticipate bearish prices, but before we do that, we currently in a discount, so I could see Monday opening, and where they decide to gap wherever Monday will open, we test these lows, so that will put foreign currencies up a little bit, and then I would assume the XY would want to come back up, get back in a premium market in relation to where we close. Alright, so I can see the XY come down a bit, into a little discount market, trade up higher. All right, come back in here, trade up a higher in a premium market. Then we could probably consolidate a bit in here, and then when we break the lows, come back down and continue the bearishness. That's something what we can expect on DXY. So again, we just come on DXY to see where we expect the weekly chart to go, and based on how we close below the previous week open and close. Didn't even get close to the high. We close closer to the low of the previous week, so we have to anticipate lower prices. So with that being said, we hop over to the charts on GU and EU. We had a good week. The last video I posted was the live trades based on this what I do here, the market breakdown, and all the trade ideas that I had for the week on the 50k were good. The 10k not so much. I got back to break even. I was in profits, and then I took some trades on UJ. You notice UJ not here no more. UJ and GJ they count. I only have the PSI trade, NAS, Euro, GU. That's it. So I'll fix the 10k, no problem, easy fix, and we're good. So I already did the low. Okay, I want to come over here and mark out the last 4 hour open bullish on EU. Coming in at 1585. It's the last bullish close. Open. For open. Right. So we already have a market point chart as the previous day. Open, high, low, close, and the last 4 hour open. And that's it. I'm not looking at no fair value gap or anything as yet. On here, I like to leave. Oh shucks, I like to leave the price legs of all the trades that I took on the 10k or this account, so we can see the ideas I have. This was a long that I closed. This was a short that I closed prematurely before we hit the target. This was a long I closed prematurely. This was a short I closed prematurely. When I say close prematurely, I still end up hitting target. This was a long I was in that I realized I keep closing my trades too early, and I didn't close this trade in this gap. I tried to hold to get up the previous day high and higher, but it came back down, stopped me out at break even. And this last trade I took, again I explained it on the last video. I knew we were going up to the average daily high, but I was just scalping on a Friday, and that's what put me up here. So what I noticed is that we at a consolidation on both sides. Even though we're still expecting higher prices, we're in a consolidation here. So meaning that we traded above the last candle, because GU is a premium from the weekly chart perspective, but I would always want to take my buys on GU over EU because I just prefer GU pair. In the last video I did say I want to see a up close and it leave this gap in here. So if we trade back down in here, we'll definitely be in a discounted market after we traded into this fair value gap. Remember, fair value gaps are high probability or considered a fair value gap, bearish or bullish, but since that's how we be bullish, in my opinion, after we tap into it and we create a higher high. So this gap in here, we tapped into it, we broke the high, made a higher high. So I'm not expecting us to get back down into this gap now, by the way, but only when we make a high after tapping into here is where I will consider this a very discounted valid period area. And anytime price get back to it on a daily or 4 hour via news or something like a quick price action, I will see it as still valid to hold, especially if it happened early in the week. So, and especially if it didn't sweep a previous day high before it happened, that's very important. So with that being said, I actually expect, even though we did have like a sideways trading, notice we never cleared and closed above this high. We never got back to this high, and we closed almost about 50% of the body. Very important. So obviously we still bullish. We did have we in a premium market here in relation to this low and this high on the daily, on the 4-1 daily. We have a relative equal highs. If you notice good, we have a we closed higher than these candles here, but not higher than the wick. We just liquidated, traded back down, and we did get a close underneath this last bullish candle body here. But we had a high, a low, relative equal high, a higher low. Expecting this low in here to get run through to the downside to put us back in a premium market, and then we would seek going back up. So I would be looking for GU. I would just do the analysis on GU, by the way. To we have a swing low here. We had a new driver at 8 in here that sent prices up, and we have relative equal highs in here. Alright, so we just coming down to create a low. So again, how low can we anticipate us to get down to? Again, just using the Fibonacci to find the swing points. See, we add 50%, so we add equilibrium of the range. We get an eyeball and see, to be honest. That's what we said is about in relation to this high and this low. We're about 50. We want to get underneath here. So what I could reasonably expect us to do is to sweep this candle down in here and reaccumulate inside of here. So what I would look like, it would look like something like this, where we can see a expansion and then a reaccumulation. I think EU does have them a little better, you know. EU been having some easy reading of price. Alright, so there's the week here. Alright, so we can see we have this high and this, so we have an accumulation coming into here, and then we cleared this high and then we trade back down. So we do have, we expecting these lows here on both pairs to be swept. So what I want to see is we open, we trade down into the previous day low, take out these lows at, oh shit, yes, we could get down maybe to the 61 level. We probably would break through and come in about see if we could get institutional number. I say 3500. Yeah, maybe at 3500. If we could get something in here, maybe some average level or something, standard deviation, 3500. Okay, there's actually a couple of alerts on this. So yeah, we can put no alerts. I just had to do it on the trader view. Yeah, somewhere at 3500, we could reasonably look for to be swept, and then we could look for a shift in market structure. Maybe we could scalp something into these down candles in here. So we will look for something to replicate this. Then we'll see those highs. Yeah, so something like this we will look for coming into next week. Let me just have a look at Forex Factory to see how we're gonna look with news. Alright, you see Monday early on we have some market movers for GU. We have anything for GU as yet. NFP. Oh yeah, next week is the first week of the new month, and I remember. Wow. Right. So we have Fed speaking on, what we're speaking at 155. We have Monday news. I believe it's to push us down in this whole day. So I'll just wake up in New York and see what New York do. Look, if anything major with this, to be honest, Monday until Fed, and then well Tuesday, yeah, I ain't gonna do nothing Monday. I just watch price. Tuesday is the day at Tankai time, 5. So London will be more likely to be choppy. and it's a CPI, Spanish CPI flash. Alright, so London might not be the best time to trade Tuesday, but again it'll be dependent on how Monday price action look on Friday. Next week will be a real low probability week if we take anything, so definitely we taking anything. We would look to scalp and step to the side. So oh yeah, by the way, I'm buying one more 50k account, and that's the last account I'm gonna buy. So if I can get before Monday, we'll be on that, and we just looking for some scalps. And yeah, so this week is a week where we have to play our cards right. Remember, at the end of the day, when you understand what the market gonna do, news is our friend. But the first week tends to be accumulation. This looks like a good seek and destroy weekend here, I'm not gonna lie. So maybe looking at one, maybe two trades, depending on if all criteria are met. Other than that, we would be on the sidelines. Alright, so with that being said, we look for price coming down to right 500, 3500. If you could get down to 3500, we would definitely be active, and we'll see how our trade look. So again, all videos will be recorded, all trades will be recorded. I noticed the last video the audio was pretty soft, so I think my mic was down, my mic volume was down, so I would play back. Hopefully this video will be a lot louder and we can take it from there. So catch you guys back at the end of next week, and hopefully this account is passed and the 10k fixed and the other 50k account, if we could even get like phase 1 done, that'd be good. So until next time, keep your trading going, keep studying, and trust me, from somebody who started off a month ago, where I'm at now, I couldn't be happier. So for those who now starting, for those who going through any like hurdles, just know you definitely will get over it. I can tell you that. So see you guys in the next video.